doors on the left side could open.
What's up, everyone? Welcome to our end of July 2022 This Week in Crypto report here with Santiment. I'm Brian. I'm going to be going solo today on the stream, and we've got a lot to discuss. By all means, as always, we want these shows to be increasingly collaborative, and we're really trying to make a drive toward that. So drop your questions anytime. interject, ask about some things that might be going on in the markets based on what you've been seeing on Santiment, or you just have questions on relating to the data, and we'll be sure to get to them today. It's obviously been an optimistic week, I guess we could put it. Yesterday was a very interesting day with news coming out that the US GDP has dropped for a second consecutive quarter. And that has brought up all sorts of discussions about whether we are now technically in a recession, because most people, or at least prior to this year, defined a recession as 2 straight quarters where the GDP has declined. And yes, this may only be related to the US, but we've all kind of, as we've learned this year, realized how correlated US stock markets are and equities are, especially right now, to cryptocurrency. So the US is kind of the centralized home base for when the world economy is healthy enough for crypto to be able to break apart and then do its thing. So that's why this is relevant. So after the big recession scare and announcement, when the GDP turned out to be lower than expected, everyone expected prices to drop for both stocks and crypto. But the contrary happened and everything rebounded, and crypto had a big day. Ever since the market close time, prices kind of flattened out and then dropped a little bit, equities markets, I should say. And now we're in a spot where the prices for like Bitcoin are still about neutral over the past week. Ethereum is up about 4%. It got up to about 1750, I saw, maybe 1740. And then there were several altcoins that really started breaking out. Ethereum Classic continues to really be a powerhouse. And then there are other assets like Bitcoin Gold, Lido DAO token, OKB, EOS, Axie Infinity, Bitcoin Cash, Uniswap, and even Hex. Like, there were a lot of big returns this week that were worth monitoring. And I'll get to a few later, but I noticed there were a ton of big whale transaction spikes. I was going over with a customer just yesterday. The Matic whale transactions were really starting to go off, and they may be worth looking into today. So clearly this is a polarizing time, as has been the theme throughout these past 3 months especially. And what we're really going to be trying to figure out is what's going on with stable coins, which I'll get to in just a moment. There's a lot of increased action going on there. What whales of Bitcoin and Ethereum are doing and how that's going to translate. And as we turn to August, our goal here is really to see what the likeliest probability is of a true rebound rather than just a continued bull trap followed by a bear trap followed by a bull trap, as we've been seeing for the last month or so. And of course, before that, it was just a big slide down. So without further ado, I do want to remind everyone, investment advice is not what we're about here. We're just trying to give you data based on everything that's going on in the crypto markets from an objective perspective, showing you divergences that have happened before and what the price results have been when we've seen similar setups, things like that. So please keep that in mind. And we will move on to the first big slide that we wanted to present today, which is the shark addresses for stablecoins right now. That would be the $10,000 to $100,000 addresses for USDC and USDT, the two largest stablecoins to keep an eye on right now. And right now, we're seeing a pretty big increase in USDC, which really went back to late April, mid-April, when Tether and Terra USD really started tumbling after their prices became unpegged. Terra USD, of course, dropped all the way to like below 4 cents. I can't remember the exact price, but it basically just ceased to be what it was defined as, a stable coin. And then Tether dropped down to 95 cents and everyone panicked there. And we saw a big drop off in whales. And that trend in this yellow line representing Tether continued all the way down until about mid-June, late June, And this is where things kind of flattened out, and we're finally slowly starting to see some confidence come back and some added buying power to Tether legitimately, not just the tiny little uptick like this, but we have a sustained growth in the amount held by shark addresses for about a month straight now. And that's a big deal. It means that people are finally coming back and having more buying power to scoop up whatever it is they want to scoop up. And in most bull runs, or when prices tend to actually start rising again, it's because, for one of many reasons, I should say, stablecoin large holders are beginning to increase their bags and have that flexibility to get a lot more crypto at any given moment, which can cause prices to surge. So that's Tether. In the meantime, we have this red line here representing the $10,000 to $100,000 USDC shark addresses, and they are continuing to grow. As I said, going back to April, where Tether addresses were declining, USDC really hasn't stopped. And what's really nice is seeing both USDC grow and USDT grow together, indicating that just the overall buying power of stablecoins is really starting to grow for these higher tier addresses. Now, we can also back it out and take a look at some of the larger addresses. We'll look at Tether first. So this is the 100K to 1 million. That's 1 million to 10 million. This one, you start to get into a lot of exchange addresses, so keep that in mind. We'll even look at the 1,000 to 10,000 just for comparison. And they're all staying pretty low here. So as we mentioned, the yellow line is what we just checked out. That's growing. The red line is still pretty flat. That's the tier right above 100,000 to 1 million. At the very least, it doesn't look like it's declined anymore. At least in the past 2 weeks, it's in about the same spot. The blue line, same thing. It's kind of flattened out over these past 2 weeks. And then the smaller ones, the guppies, if you will, whatever you want to call the tier below sharks, they are still staying pretty low. So if you combine all of these together, and I'm intentionally not including 10 million to infinity, because these are going to be mostly exchange addresses, or at least very dormant addresses that rarely move. They hold 2/3 of the entire supply. So that tells you a lot about just how much power they have. But like I said, much of them are related to exchange addresses. So I'm going to merge these four really quick. 1, 2, 3, 4, hit confirm. And that tells us exactly what the combined holdings are of the 1,000 all the way up to $10 million addresses for USDT. And it's about what we were looking at for those other three tiers. They're all kind of flat over the past 2 weeks. So until that changes, we're at least happy to see that there's no longer this big free fall. But if it starts to rise, that's going to be a good trigger that this price climb can continue and have some increased probability of doing so. If it continues to decline again and go back down, potentially, below 30% for these four tiers combined, that's going to be a sign of prices being at greater risk. So that's Tether. Really quickly, we'll also look at that for USDC, since that is relevant and the news for it is a lot more positive. 1,000, actually, I'll merge them all together. All right, so going back to June 12th, there was this big rise here, and it really hasn't stopped. So we saw that Tether was sitting around 32-ish%. The combined total for USDC is way up at 39% for these same four tiers. And that's a nice promising sign, in my opinion. It really shows that there is some increased buying power going on here. And if we back up, we see just how huge this rise has been, going all the way back to mid-February. Could even go back further. We'll go all the way back to 2019. Why not? So way back here, this was Black Thursday when everything dropped due to COVID scares. You saw stable coins really drop on this rise because a lot was being injected into Bitcoin and many other assets. And it really bottomed out here after the initial drop following the April all-time high, then all-time high from 2021. Eventually, their buying power increased, and not coincidentally, so did price. But it stayed pretty far down and really plummeted in early February to its bottom. And now it's growing again. So this is kind of like the eye before the storm, we hope. If USDC can continue to climb a little bit more, potentially get up to these levels, 45%, 50% of the overall supply, that's a really good sign that the large powers and buyers are going to be able to push up the price of crypto in general in the near future. All right, so that's USDT and USDC in terms of their whale behavior. Let's take a look at circulation for a few of the key stablecoins. Now check this out. The amount of unique tokens moving on the DAI, Tether, and USDC networks is showing pretty major increases ever since the beginning of May. This is when that big drop-off happened after the FOMC decision before this last one occurred. And especially, I mean, look at USDC here. It hit 2.4 billion unique tokens moved in, I believe, yeah, this was just a 4-hour period. That was its highest in a very long time. I mean, we're looking at the 2-year perspective already. If I just zoom out even more, it gets pretty smoothed out. So like for the most part, you can see that all of these circulations are increasing. And that's a very good sign showing that, stable coins are not being ignored right now. If anything, over time, they're just getting utilized more and more as people trade in and out of their crypto assets, look for, some safety in the markets and rinse and repeat. So as long as people are using it as that life preserver for them whenever they feel that they want to take profit, that's great. What we don't want to see is them taking profit and going straight into fiat and cashing out. We want to see that crypto is going to continue to have circulation throughout the months and years. And if stable coins are just being used more and more, that's a sign that even when crypto assets like Bitcoin, Ethereum, etc., aren't being used, at least it's still in crypto via stable coins. Hope that makes sense. All right, so now we can get into some of the more traditional metrics. Like I said at the beginning of the call, really want to make this more of a collaborative discussion. So feel free to drop questions anytime. I'm checking chat myself right now really quick just to see if anything is going on here. Nope, nothing special, just a lot of good mornings. Hi, everybody, hope you're all well. Like I said, drop questions freely. So looking at Bitcoin right now, the question is what's going on, right? We just had a big recession. If we want, we can actually open up the dashboard and check out what some of the top discussions are. And predictably, the number one topic is recession. Because like we said, there's that big concern that we are now officially in an economic decline due to 2 straight months of negative GDP. That is a big deal. If we open it up, we can just click on recession. Boom, you can see all the talk that's really happened over just the past 24 hours or so. Reddit and Twitter especially, major spikes as the GDP numbers were coming in yesterday. So yeah, as promised, I'll go back to Bitcoin, but we might look at a few social trends here in a little bit. So as far as Bitcoin's circulation goes, we're looking at what appears to be a bit of a decline after a pretty impressive rise throughout most of 2022. This was the start of the year. You can see the red trend line showing the daily unique tokens moving on the network and the 30-day moving average that it was outputting. Overall, we got to a peak of what it looks like to be about 239,000 Bitcoin per day, and it's now starting to drop off a little bit. we're back to levels that we really haven't seen since late January. So that's going to be a little bit of concern. How much? Well, we have a model that can really show that. If we look at the NVT model here, we can see the months where things were bearish, where things were looking semi-bullish or just full-on bullish, based on the amount of token circulation happening compared to the price or overall value of the market cap at any given time. And after a good stretch from October all the way until June, where we were getting either semi-bullish or bullish divergences, it appears that July is likely going to end in neutral territory due to this drop-off in unique tokens, because there have been a lot of weekends and capitulation happening over the past 6 months in particular, as 2022 has really shown to be a rough month for many traders. So with that said, there's going to be less participants in crypto that can send circulation moving down, and that can be a concern long-term unless there are some new entrants coming in, which we're hoping are happening right now when we have this rebound where Bitcoin goes down to the 17Ks and now close to 25K once again. That's when you typically see new entries come in and say, maybe I should try crypto. I've seen that it's been finally growing again. And that's going to boost circulation eventually. But for now, we're sitting in neutral territory. And until that changes, your perspective, at least toward the utility side of things, can be exactly what it's showing. It's kind of, it can break either way at the moment. But we do have to keep in mind that it's coming after a very long stretch, about 8 straight months of bullish signals. So that should still be a factor even now, because there hasn't been too much of a bounce or reaction to this bullish divergence. And that can still have some lingering positive effects on the price, even with a current output of neutral. The other thing to keep in mind on the utility side of things is daily active addresses. And that's not really looking better. In fact, it's probably a little bit of a worse outlook than circulation. The amount of unique addresses moving or interacting, I should say, on the network is on a decline once again. It had a temporary peak back in mid-May because a lot of people were reacting and either buying or selling hard here on this initial, well, not initial, but at least the dip before the most recent one. And ever since then, things have just declined in unique address activity. So until this changes, we're going to just have to play the waiting game and wait for daily active addresses to pick up. But it doesn't mean prices can't surge without, as many participants as we had during the bull run back in October and November when it was peaking. It just means it's going to be a little harder to do so because one of the primary ingredients for prices to grow is daily active addresses and circulation. But we can still have whales, which we'll look at momentarily, boost up the price and suddenly get, as a chain reaction, many people back in the game who are trading and interacting with the price. All right, so that is utility. Why don't we take a look now at the funding rates of Bitcoin and altcoins in general, and then jump back into some more Bitcoin metrics so we can kind of mix things up a little. So we're looking at each individual asset, and at least in the top 100 or so, and looking at where their average exchange funding rate is currently sitting. Are there an excessive amount of longs or an excessive amount of shorts or anything in between? It looks like for the most part, most assets are either in neutral or they're in short territory right now. There are a lot of people betting that prices will go back down, and it looked this way even before yesterday's big jump. We can see a few key ones. Ren is seeing a lot of shorts right now. Small Love Potion, Matic, Bitcoin SV, Bancor, Axie Infinity, among others. And sometimes this will be a reaction to a few of these assets seeing a big uptick. And sometimes it'll just be like some negative news coming out, or some people just not liking a few assets and thinking they don't have long-term viability, so why not bet against their price? But whatever reasons people have, this chart doesn't lie to us. It really just shows exactly what where people are placing their bets, whether it be longing or shorting. So if you want to make part of your strategy longing the assets where people are shorting the most, in theory, that's a viable way to go, because generally, the further people are shorting, the more chance there is of short liquidations generating rocket fuel, so to speak, for that asset, and then sending the price up. But keep in mind, there are so many other factors that can play into whether prices move up and down, and this is just one of them. So don't bank on, something like Bancor or Ren just going nuts just because there's a lot of shorts going on. And then taking a look at this view, what we're looking at now is the average exchange funding rate on exchanges for Bitcoin here in blue, and the average funding rate on exchanges for altcoins, all of the altcoins blended together in purple. And we see pretty clearly that just in the last couple hours, there's been a big uptick in long trades going on. The perpetual contract funding rate has moved up. I think this is like close to a week high. I've got a chart for that really quick to check out the average funding rate. And we'll zoom in here. We'll do the last month. Okay, so not quite a week high, take it back, but it is certainly in high range. Anything usually like above, I don't know, right around 1.2 or so, like that has tended to be a spot where it's an extreme amount of longs, at least in recent times. And we're just above that right now. We actually got all the way up here on July 19th before there was an eventual local top a few hours later. But this is what I'm talking about. Usually when there are shorts going on, bottoms occur. When there are longs going on, it's more likely to see tops because the funding rate is always going to try to force people back to the even point, just like MVRV and many of our other metrics where, it's kind of a greed indicator when we're way up here and a fear indicator when we're down here, and prices generally move in the opposite direction of the crowd's perspectives. So, like I said, funding rate has shot up just in the last couple hours. That's something to keep in mind. In a vacuum, that is a foreshadow of a more probable downtick in price until the greed goes away, but anything can happen. All right, moving back to the charts, let's see if there are any follow-up questions. There are. Bitcoin miner solvency and capitulation. It's an interesting question. I think we could potentially look at that. No, you know what? I don't think Balresh and Gary or anyone else in the chat, correct me if I'm wrong, but we're a little limited on the Bitcoin miner data on our platform, right? We do have Ethereum, but not Bitcoin. We'll get back to your question. Thank you for asking, Justin. Alex, given the objective negative sentiment of this week's announcements, this pump feels like a bull trap. Do you foresee any potential macro catalyst that might help to sustain the current trajectory? Yeah, I think that's a really, really good point. There is kind of that feeling of a bull trap, especially with today's price starting to decline a bit after the big uptick yesterday following negative news. So oftentimes, you'll see that buy the news, or buy the rumor, sell the news, or sell the rumor, buy the news effect going on, where on the day of, after everyone expects prices to go down, it instead goes up, like what happened yesterday. That can have a temporary effect to it, but eventually, once traders just convince themselves that they were crazy and they guess they should just ride this wave up, that's when prices actually do start to go down and start to see the effects of a recession. Now, keep in mind, Bitcoin is not the S&P 500. It's been correlated to it all year long pretty tightly. We can illustrate that right here, in fact. Right here. So we can look at Bitcoin versus the S&P versus gold in green, blue, and gold respectively. This is just the last month. Even if we do the last 6 months, you'll still see how tight it is. The S&P is done actually, it's still a little higher in range compared to Bitcoin prices. But as long as there are legitimate fears of recession, and that data isn't false. You know, a second consecutive drop in GDP is a concern and not just a myth. That can have a negative effect on stocks for potentially the rest of the year or longer. And there are plenty of positive innovations. You know, Ethereum is coming out with some major improvements in just the next month and a half, planned for mid-September. There's a big transition, and many projects out there are still being used all over the world for real life use cases. And you know, the biggest argument for a rise might just be the fact that maybe we never should have dropped as far as we did. Like, there is a legitimate case that the drop from 68K plus from November to going all the way down into the 17Ks was a major overreaction, and it was really just an effect of so many large players dropping their holdings at like a simultaneous time frame in the first half of 2022. And we can look at whales really quick because it is basically my answer to your question. Let me switch this to Tether so we can look at both together. I think one of the biggest catalysts is going to be these two lines beginning to go up again. We're looking at just the past 6 months. Tether is represented here in pink. These are the legitimate whales holding somewhere between $100,000 to $10 million in Tether. And the gold line is the 100 to 10,000 Bitcoin addresses, which is essentially the largest range of large active traders that are actually reacting to price, causing things to move up and down. Mostly not exchanges, though, especially toward 10,000. There are plenty of exchanges, exchange addresses that have this size. And really what we're looking for is a turnaround here. And Bitcoin really hasn't shown much. It has like teases from time to time, as it did in late June, but eventually it just drops further down. And this looks like a bearish divergence right here, where the top holders are still declining, but prices are beginning to rise. Not ideal. We'd much rather at least see that the Bitcoin whales are starting to flatten out with their holdings, so that we can have some confidence based on the large holders' confidence. That would certainly be a catalyst for prices to have more of a sustained rise rather than continuing to feel like we're getting fooled every time things go up. You know, it ends up being a bull trap. Things go up, bull trap, things go up, bull trap. And now, for a fourth time, everyone's wondering whether it's going to be the same old story. Now, 4 straight higher highs from a technical analysis perspective, that does have some merit as being a legitimate breakout indicator. There's a big theory that there's triple bottom and triple top indications where on the third time, if it happens consecutively, that's the time when it's for real and not just a facade anymore. So take that with a grain of salt. But obviously we had kind of a triple top already, with the last one being about 10 days ago before declining again. And though we aren't technical analysis experts at Santiment, we do the fundamental side. I know that there has been some talk about that, with rising higher highs 4 straight times on this past 2 week or so journey upward. So in short, we need Bitcoin whales and Tether whales to begin to grow in their accumulated coins once again. We already discussed Tether and how it's sort of at least flattened out for now. And we'll see if Bitcoin can follow that. That would be a really good catalyst. Let's see. Can you please check link, please? Yeah, if anyone like Maxim in the chat, or Gary or Balresh, if you can give Justin some more info on the miners, because that's not my expertise, I think that would be really helpful, because I'd really be interested in that answer as well. Possibility the DXY will be listed. I'm not sure, B Park. I'm really not positive on that one. Did I remember what we talked about on the Discord a few days ago? Link move is super bullish today. Let's check out Link really quick, and we will still get through the rest of Bitcoin's main metrics. Don't worry. All right, so let's see what BPark is referring to. We certainly had a ridiculously high circulation spike, but that wasn't today. That was about a month ago, so ignore that. MVRV is very high. That's a concern. That's not a good thing. Age consumed, I'm not really seeing anything there. Supply and exchanges is looking normal. Big social volume and dominance spike a few days ago. This is interesting. So there's a ton of profit taking going on for Link. 3.5 times as many profit transactions compared to loss transactions is very large. I'm not seeing what the big anomaly is for Link. So maybe if you can mention in the chat exactly what you're seeing, BPark, we can check that out. In the meantime, we will go back and check out what's going on with Bitcoin, and we will definitely have plenty of time to look over Link and a few other altcoin requests you guys have toward the end of the call. While we're on the topic of ratio profit loss, actually, I think that's a good thing to check out because Ethereum went nuts to begin the week. So this is showing in blue Bitcoin's ratio of transaction volume and profit to loss, and Ethereum respectively in pink here. Generally speaking, I'm going to zoom out to illustrate my point better. When you see the really big high spikes, that is usually indicative of an upcoming probable correction. Not always, but many times. Typically, this Bitcoin one, for example, we'll at least see a short-term correction before things potentially can continue to go up, or you'll see a big spike and it'll be the beginning of a big retracement as we saw here, or even here. Or even here, I'd say, is a pretty good indication that we were getting overheated, even just flattening out when we had further to drop. So on the Bitcoin side of things have been starting to tick up a little bit. We're seeing a little more on the side of profit transactions compared to losses right now, but not to an extreme degree. Ethereum, on the other hand, if I switch the price, and I'll just get rid of Bitcoins for a moment. So check out how well this metric has done as an alpha predictor, with several major spikes indicating at least a short-term drop, or many times a major local top. This one happened about a week before the all-time high, and then there was a massive drop. It tried to bounce here, a lot of profit taking going on, and then a huge downfall. Same here, right at the end of the week, big downfall. Same here, a few days after the end of the week. That was the last big local top, really. And then we've seen, of course, this short-term one where prices at least flattened out and dropped shortly. And then the big rise up to about 1750 yesterday, where we're now seeing, just through the first day and a half or so of the new week, one of the largest, or at least over the last year, the largest pace that we're on in terms of the ratio between profit and loss transactions. So that's going to be a huge concern, and it can be a limiting factor in how much prices continue to go up, because there can't be this much profit-taking transactions compared to losses without some equalizing event to keep prices back down. So I thought that was an important metric to look at for both Bitcoin and Ethereum really quick. Now for real, we will go back and look at some of the main metrics that we typically check out for Bitcoin. The 30-day MVRV here. So typically, I know many of you have seen me draw these lines many times. For those who are new, what these lines indicate are essentially the danger and opportunity zones. So anytime this pink line goes over the plus 15% mark, it's a territory where we usually see a price top occur. Same down here, if the MVRV in pink goes below the negative 15% line, that typically is when bounces tend to occur and bottoms form. And we've seen that be illustrated plenty of times with, of course, I should say up here. Back in October, there was a big local top, even though we hit another all-time high a few weeks later. This was a good indication as well. And we really haven't been above the 15% mark since, surprisingly. On the other end, we have been below negative 15% on 4 separate occasions. And on each of them, there have at least been a temporary flattening out of the price or a bounce. This one was kind of a flattening out. It actually did bounce after getting below temporarily. This one was a legitimate bounce where right at the bottom here, prices rose about 41% before declining back down again. This one was a flattening out period. And then this one was a legitimate bottom as well, where prices have gone up about 27% since it hit its bottom here on the MVRV side. So where are we now? We're at about plus 9%, which means we are closer to that danger zone than we are to neutral at 0%. All MVRVs, no matter what the time frame is, tend to fluctuate around 0% over time because it is a zero-sum game at the end of the day, and it's something many of us forget because it feels like we're all on the same team and prices are just going to go up and everyone's going to get Lambos like people used to talk about all the time, you know, in the 2016-17 bull run at least. So with that said, we are at a greater risk than usual for a bit of a correction, which makes sense. We have had quite a good July thus far. Not an amazing July, but at least a good one, especially compared to what's gone on for most of 2022. So keep this in mind, and if you are adding on to your position or opening a new position in Bitcoin, you're doing so at a higher risk point than usual for Bitcoin's network. On the other end of the spectrum, the long term, so 365-day MVRV, which you'll see fluctuate much closer to just the normal price action. But if we zoom out here, we'll do the last 7 years, go back to 2015. So when there are huge extremes in the 365-day MVRV, that's when we'll see corrections occur here and here, right at the local tops. Even here, this one happened about a month and a half before the big local top that sent prices plummeting. And then on the opposing end, when you see it really low, like in November 2018, or even just about a month ago in mid-June, that's when you'll see the big price bottoms occur. So if this 365-day MVRV repeats history the way this one does, or even this one does, we're in for a good long-term rise. But there's, of course, so many more factors, and we can't just say that the price is going to rip every single time the 365-day MVRV goes, you know, past negative 30% or so. It is a good sign long-term, though, even though we're having the slightly bearish signal showing on the 30-day MVRV. This would definitely be a bullish signal. And to illustrate that point, because it can be a headache to decide, you know, should I pay most attention to the 7-day or 30-day or 365-day MVRV, we put a model together that can allow us to check out what all of the blended MVRV timeframes look like together to get an idea of how close they are to each of their respective extremes. I was just going over this, and it's going to refresh, of course, but I was going over some of the methodology with a customer yesterday. And this is kind of how we calculate. We did a back test on about 30 different assets over a couple of years to see what the extremes were for the 1-day MVRV, the 7-day MVRV, 30-day, 90, 180, and 365-day MVRV. And as you'd expect, the longer the time frame, the wider the range will be between what's considered to be an extreme on the high end or the low end. And what we do is we use these as the extreme zone. So if, you know, the 30-day is exceeding 16% on the high side, or, you know, negative 18 to 19 on the low side, that's considered a top 5 or bottom 5% chance or percentile of when you typically see the corrections or the price bounces. So the closer it is to that, the more likely it's considered to be extremely overbought or extremely oversold. And as some of these come back, you'll be able to see a pretty wide spread of different results depending on the asset, which is kind of exciting. It really allows this kind of model to help foresee which assets have the highest likelihood of continuing to rise despite this polarizing time right now. Bitcoin and Ethereum, after their great days yesterday, I think they've kind of neutralized. We see Chainlink looking pretty overbought at the moment because of the fact that it's really had a nice run over the past couple of weeks. Each of these lines represents like the 1-day divergence versus the extreme, 7, 30, etc. And if it's over 100, that means it's well past what's considered to be that extreme that I just showed over here for that respective time frame. So now that they're all popping up again, you can see it's mostly red and orange, a few yellows, but the red and orange mean overbought or semi-overbought. So that's going to be a concern. And the reason we're seeing so much red and orange is obviously it's been a great July, but especially just the last 1 to 7 days, the MVRVs are looking very high and very close, if not exceeding their respective danger zones. So, you know, an exception might be something like the sandbox. It looks like it's still semi-underbought based on really just not having the same returns over the past 7 or 30 days compared to most assets. On the other end, you know, Uniswap looks like it's really gone on a big tear in terms of average trading returns. So that's considered to be past the danger zone right now. Wi-Fi is just below that danger zone. Celsius is way past it. Chainlink is very close to it as well. And FTX token is getting close to it as well. So this is a model that you can check out and use anytime if you're a Sandbase Pro member, and use this kind of data to your advantage to quickly just have a snapshot of which assets are looking best on the MVRV side. Can you drop a link to your Google Doc spreadsheets if you can share them? Yeah, typing the URL won't work because these aren't the same models that are available to the public. We have public Sandsheets links where you'll be able to just make a copy of them. So it's under your account instead of the account owner. And then you just plug in your Sandbase Pro API and the data will pop up. So as long as you have Sandbase Pro, you'll just want to go to extensions, Sandsheets, enter your API key. And as soon as you do, you know, you can give it a browser refresh just to make sure it's hooking in, and then it should all load. If for some reason it still doesn't, you know, contact me or our support team on Intercom, and we'll be happy to help get it sorted out for you. I will try to drop those links at the end of the call, right when it's over, if you stick around and chat. Okay, going back to Bitcoin, we'll resume. Age consumed, let's zoom in here again to the last 6 months. So no major spikes. We did have one last week that looked like it was a reversal toward the downside, and that's exactly what happened here. So this age consumed spike sort of did its job as a price reversal indicator. Supply and exchanges, let's go to about a year ago. It's looked pretty good for supply and exchanges throughout the past year. It peaked here at about 13.5% in late August. And ever since then, the percentage of Bitcoin sitting on exchanges has continued to drop. It did start to move up in mid-July, but quickly moved back down, and it's kind of flattened since then. We ideally would love to see it continue to drop because that means there is less and less risk of a future major sell-off on the Bitcoin network because they're not on exchanges to be sold. We went over whales already. It's not looking great. We still need to see a much bigger pop-up than the very small one that's happened the past 2 or 3 days. Exchange flow balance, pretty neutral at the moment. This is going to mostly correlate with supply and exchanges, and there's not anything too special happening there for now. Network realized profit loss, not looking too exciting either direction. Our last big spike, I would say, was here on the upside and here on the downside. This one correlated well with the local top, so keep in mind that these high spikes are still kind of a danger marker and something to be wary of because there's too much profiting going on the network. That's what that really means. Development activity is looking fine. It's looking neutral. Social dominance. Okay. So the percentage of discussion related to Bitcoin, generally just as an arbitrary number, we like to look at just about 20%, give or take, right about there. And that's about right where social dominance lies for Bitcoin at the moment. When it's below, that's a sign that we are not getting enough attention for the number one asset that really churns the entire crypto markets up and down. When we're above, that's a good sign that there's a healthy acknowledgement of Bitcoin and its importance on the crypto ecosystem. So when we see these really high spikes, it's not coincidental that prices tend to rise, not just for Bitcoin, but for altcoins and most crypto assets in the sector. You can see what happens when we're below. That's when prices tend to decline, especially right here. This was a very concerning sign in March. Even though prices were rising, there were many less discussions related to Bitcoin, and everyone was going right back to their initial greed that they were having during the bull run, trying to get on the Dogecoin train, a lot of meme coins, Terra Luna right before its crash. There was a lot of discussion related to those instead of Bitcoin. And eventually it took quite a few separate mini to major crashes to finally get social dominance back above 20%, where prices began to start looking a little better. And this, as soon as we got here, this is essentially the price bottom indicator, more or less, after a little bit of volatility. And it stayed up way above 20% throughout June and July until we finally got this mini breakout where we're back around here. I know it's a little hard to see with the bright green and bright blue together, but bear with me. Now that things have risen again, there is a little bit more increase in altcoin talk again. We are back at about 20% after being, above 30% for a little bit. So this is kind of a neutral signal for now. We'd like to see social dominance start to rise again, but greed is a powerful thing, and altcoins look very enticing to a lot of people right now after some pretty big few weeks throughout July. So hopefully that greed kind of gets suppressed soon, and the crowd begins to look at Bitcoin at a higher clip than they are right now. At least we're still around 20%, but if we start to hit 15% or below, be careful, because that tends to be when those price corrections start to pop up again. And just on the overall social volume side, it does look like there's a pretty decent amount of discussion. I'm going to draw a 30-day moving average really quick by just clicking here, and you'll see indicator pop up, and I highlighted moving average 30. This red line looks more or less pretty neutral over the last year or so. So outside of this big spike, it's just been very noisy, with a lot of discussion related to Bitcoin one day and not very much the next day. Going back to the social trends really quick, we can actually type in an asterisk into the social context dashboard. And if I hit enter there, give it a few seconds, and we will see the total social volume related to all crypto platforms pop up. And overall, we see that over the last 3 months, there's been a decline. If I go way zoomed out to the last year, we see that the decline really started right around the all-time high in early to mid-November. We did have this temporary uptick in late April, but that quickly got back to normal and proceeded to go down again. So now we're sitting, the last full bar was at about 186,000. At its peak in late April, we were looking at about 477,000. So probably about 3 times as much discussion compared to where it is now. During the all-time high, we were more or less sitting between 250,000 to 300,000 comments. So it is going down a little bit. This isn't necessarily the worst thing in the world. I think we'd rather see that the discussion is rising for Bitcoin rather than falling. But this is just a natural occurrence that is going to happen after an 8-month, 9-month decline in prices, like we saw between November and really at least mid-July before things started to pop up. So that's kind of an idea, not just for Bitcoin here, but I wanted to show all of crypto platforms and how much they're discussing anything and everything related to crypto right now. A few final things to check out before we move on to some altcoin questions. Weighted sentiment. This is basically the unique social volume. So instead of all of the social volume together, just tabulated on crypto platforms, it's only counting the amount of people discussing Bitcoin on a day-to-day basis instead of just counting 15 times that someone typed in Bitcoin in Discord, Reddit, Telegram, or Twitter. And it's multiplying that by the ratio between positive and negative comments using a proprietary algorithm we have. So basically what it's showing is there have been plenty of respective huge euphoric spikes. Most of them occur around local tops. You want to avoid those. We had a huge one here, which interestingly happened more toward a bottom than a top. I think it might be better for us to look at it on a week scale instead of a daily. Yeah, I think this is a much better perspective, and it's what I use on my main template. On the weekly scale, when you see these big spikes, you'll see that they very, very often correlate with tops. This one, and this one was kind of occurring as the price was declining, so it's kind of like midway through it had a decline, and then it went negative the last 2 weeks before the last couple days. Bitcoin started to rip up, and now it's back in positive territory again. Not to an extreme degree by any means, but certainly there are some early signs of euphoria after prices have started to climb back over 24K and got close to 25K at one point. So very mildly bearish, I'd say, as far as what the weighted sentiment is showing right now. We'd much rather see disbelief and people crossing their arms and saying, I don't believe Bitcoin's going to continue climbing. This is definitely a bull trap. That tends to be when prices continue to go up. I already touched on the ratio of transactions and profit versus loss. Whale transactions are interesting. Bitcoin is pretty neutral right now, but if we look here, this is our whale transactions model. And the closer we get to 100% for some of these spikes, the closer we'll see something like a price turnaround occur. And we see that there are several assets like Gala that are currently seeing pretty much the highest amount of whale activity, at least over the past 3 months, happening right now in the current 4-hour candles. Maker, Matic, they're all very close. Uniswap as well, Chainlink, Curve. And this all makes sense because we just saw a pretty big altcoin uptick over the past 24 to 48 hours or so. And we can take a look at a few of those really quick just to illustrate the point. Let's take a look at Matic really quick, which I alluded to earlier. We'll look at the last 3 months, switch this to 4 hours to match the model, and check that out. So as the model indicated, we were just seeing a very, very high spike in whale activity. There were over, it looks like 98, exactly 98 transactions that exceeded $100,000 or more. Right when that happened, prices started to decline. Now the question is whether it'll continue to decline. Usually if we stop seeing any whale activity, that means the whales are content with that being the local top and they're kind of expecting prices to go back down. But if we start to see another big candle, we can quickly see that they're now accumulating once again, just on a short decline. So that's something to keep an eye on. We mentioned Gala being like at the 3-month high, so let's take a look at that really quick. So Gala, let's see. So the model is saying that we are on pace for a very high 4-hour candle. And it makes sense because I think what it's doing here, it's only calculated a few hours here out of the 4-hour candle, and it's projecting for it to be way up here by the end of it. You can see how the candle is slim compared to it. It might mean that the data is a bit delayed for this one, and it's only showing like the first 30 minutes of the candle. Let me see if I can like zoom in a little more. Okay, that looks better. So just over the past week, this candle isn't even fully done, and the model's projecting that it'll be even higher than the week high here. So that's probably why it's showing such a high whale transaction. It's spike. It's expecting things to move even higher. So that's something to keep in mind for Gala. You can look at one more. Let's check out Uniswap. Uniswap isn't showing too much right now, but according to the model, yeah, it's in the 95% range. So even though it may not be at like a 3-month high, it should be considered one of the higher ones, which it is, because most of these are very low at like 1 to 10 whale transactions. And already in the current candle, it's at 21. So it could very well exceed 30, 35 whale transactions. And that's why you're seeing such high activity on the model. So that's a good way to just get a snapshot of which assets here are seeing the most major whale activity happening, and where some price direction shifts might be about to occur. You can also look at the stars here and see which whales are accumulating the most or holding the most compared to their 3-month average. So these purple stars are basically where we currently stand compared to the 3-month average. We see Shiba is way up there, but take that with a grain of salt because it's still a very new coin where the top addresses are distributing to the lower ones. Loopring is very up there. That would be legitimate. Gnosis is legitimate. Convex, Chainlink, Binance USD, Aave. These are all pretty good signs of some assets that are being accumulated by whales, and they're expecting prices to move up soon. You could even look at one-day changes just for like a big uptick that just happened, like Convex. Another one, there aren't too many other big ones. It looks like this one's hiding here, Gnosis. XRP is seeing some good whale activity. When you see all 3 colored stars in positive territory on the 1, 7, and 90-day time frame, that's a pretty good sign that there's some big accumulation going on. So XRP is looking good there. Serum has all 3 above. It looks like Dent is up there. So there's a lot of information that you can grab just from this one chart, and that's kind of the point. I wanted to make sure it would be a model where there wouldn't be a whole lot of need for tabbing over to something else or looking at a specific asset to find the info you need. It's pretty much all right here once you really get a grasp of how to read this well. And you even have price changes in black and gray here showing the 1-day percentage price change and 7-day percentage price change. All right, and that pretty much concludes the main portion of the analysis. We can take the last 15 to 20 minutes to go over a few altcoin requests if you guys would like. Do we have anything that's popped up just yet? And yeah, appreciate the kind words, guys. Thanks for the
request for Ape
compliments in chat. What was that?
Apecoin. You want to go?
Apecoin. Sure. Take a look at Apecoin, which is of course part of the NFT ecosphere. So Apecoin, we do have ERC20 data on, so we have plenty that we can look through. Let's take a look at the last 3 months, which we're already on. So circulation is not really showing anything special. The last big spike we had was about 10 days ago. Daily active addresses pretty low as well, but this is kind of skewing the axis a bit. So let me look at the last month instead. We had a big uptick about 8 days ago on the 21st. Prices did move up in tandem with this daily active address spike. Another one here where prices did move up. This was yesterday. So daily active addresses, it could have a little bit of legs right now. It looks like there have been some increases compared to the dormancy that we saw in late June and early July. So utility is looking pretty neutral on the circulation end and maybe just slightly bullish on the daily active address end. Let's see if we have MVRV 30-day for ApeCoin. I'm genuinely not sure. Okay, so the 30-day MVRV, it looks like we are in close to danger zone area. It was in danger zone area yesterday, where average price returns on the 30-day scale was up to plus 21.5%. Now it's back down to 13%, so just below what we call that arbitrary danger zone here at about 15%. That's where we tend to see price corrections, so just be wary of that. Looking a little bit semi-bearish though, because it is well above 0%. Age consumed, pretty neutral right now, nothing special. Supply and exchanges is moving up and not down right now. This is pretty much when it started in March. Oftentimes with a coin that's very young and still starting out, this is normal. So I wouldn't put too much credence in the supply moving up. That's just kind of the natural distribution pattern that you'll see for a coin that's, less than a year old. As far as whales, it's probably going to be a little misleading too with it being such a young coin, but let's check out how some of the key tiers might look. The price is currently just below $7. So we'll check out the 100,000 to a million. Actually, no, we'll go one step lower. 10,000 to 100, 100 to 1 million, and a million to 10 million. Let's look at just the last 3 months. All right, so the 1 million to 10 million tier owns about 88% of the supply now, after they held 85% about a month and a half ago. And it looks like the gold line is starting to move down again. The red line is moving down. It looks like, yeah, the very top holders, 1 million to 10 million, they're accumulating. And it's hard to say whether that's because the most active traders are here in yellow and red, or because they're just capitulating and the very top active traders are here in blue. I would anticipate that these are mostly exchange addresses. So especially with it being such a young coin, it's hard to imagine there are a ton of, $7 million plus holders that are in this blue territory. So yellow and red are pretty much what I think are the active traders, and they're both moving down right now. I'd be a little concerned about this being at about 4.1% in mid-June and about 3.6% a month later. That's concerning. And even the red line, the tier below that, is moving down too. So semi-bearish on the whale perspective, in my opinion. Exchange flow balance, not too much happening there. Network realized profit loss, neutral. Social volume is pretty much neutral right now. Let's see if there's anything on the dominance end. No, not really. It's pretty neutral right now. Not any excessive discussion related to ApeCoin at the moment. Weighted sentiment on the other end, after this recent pump, we're seeing some positivity once again. If we go back to the last year, yeah, this is really the first time we've seen excessive euphoria or more positive than negative perception compared to usual for ApeCoin since the very beginning of its public trading back in March. So that's something to keep in mind. That's going to be a bearish signal for sure, because it's been mostly below that line for the last 5-6 months. Ratio of daily transactions and profit to loss. So this is the 1.0 line right here. Anything above that means there are more profit transactions than loss. It doesn't look like there's an extreme amount, especially once it gets over 3.0. That's when you really start to see that there's quite a bit of profit taking. But none of these bars have gone past that in recent days. This was the closest it came, and the price didn't really get impacted by it. So this is neutral for now. Whale transaction count, we'll zoom into just the last month. We did see a big whale transaction count spike right at the top yesterday, and prices have been declining since. So that's a concern because this called the local top very well. Even this one did too, and this one. So the three biggest whale transaction count spikes all correlated with a local top. It may not last, if we see another whale transaction spike, if the price continues to decline, that would be a sign that likely a lot of those same whales dumped here and wanted to buy back in here, wherever that may be. But for now, probably looking slightly bearish because there was a big recent whale transaction count spike at the top. Mean dollar invested age shows that there isn't a lot of dormant tokens moving. It's pretty irrelevant when the coin is so young. And that's about it for ApeCoin. So probably a little more bearishness than bullishness from what I saw from the main metrics we're looking at right now. What's another asset that we can check out, guys? I see BNB.
Yeah, let's go with that one.
Okie doke. Binance Coin, the native token to the largest exchange in the world. Circulation looks pretty normal for now. The last big spike happened at a local bottom on the 13th. Address activity is going way down. So I don't know if this is because the overall amount of users on Binance is starting to lower. I wouldn't be surprised based on this chart. But yeah, the utility for Binance Coin has really plummeted in a massive way. If we look at the last year, yeah, easily the lowest it's been over the past year. Let's look at the last 3 years. So yeah, the Binance Coin is seeing the least amount of address activity really since late 2020, it looks like. So we're about a year and a half, a little over, since we last saw address activity this low. That's definitely a concern. So utility is not looking great at all. The 30-day MVRV, let's go back to 3 months. If we draw the 15% line, it's going to be right about there. We'll get rid of that. So we are well above the 30-day MVRV danger zone line right now. That's concerning as well. It's obviously been on quite a run despite the lack of utility on it. Since the local bottom, Binance Coin is up 49%, pretty massive uptick. And with that, that's why the 30-day MVRV has just crossed over 30%. And that is definitely considered a danger zone, folks. So keep that in mind and be a little cautious about how much more prices can rise before there's at least an event to get the MVRV back down below this plus 15% line. H consumed spike, nothing special. Interesting thing about Binance Coin's H consumed spike, we'll very often see a huge spike correlate with an uptick in Bitcoin's prices because Binance Coin has so much power and correlation, almost like a stable coin, to the price of Bitcoin, because it's one of the key pairings outside of Tether that'll often spur a big bull run or a big bear run. Let me see if I can pull up Bitcoin's price really quick. Actually, we'll keep it on that one and use the mini selector here. Add price. Where did my age consumed go? There it is. So yeah, as this age consumed spike happened, it pretty much correlated with the local bottom, maybe a day after, for Bitcoin's price. And that's pretty normal. I can zoom out to the past year and there should be more examples of that. So age consumed works well as a price direction shifter. So this is Binance Coin's dormant coins moving multiplied by the amount multiplied by the age of how long they were sitting dormant. So the larger the spike, the more old, large amount of coins are moving. And this one correlated with the local top. This was a bottom. This kind of a top, not the best alpha there. This one was hard to say as well. And then this one was pretty clearly a bottom because prices had been declining leading up to that. Same here as well. So there is some alpha there that I think can be pretty sneaky and something I want to do a study on in the future. Just wanted to bring that one up. As far as whales go, let's check out what's going on with Binance Coin's whales. So it's currently priced at 292. So around the 100 to 1,000 and 1,000 to 10,000. These are going to be the three main tiers, maybe even that one. I'm going to combine them all together. So combined, the Binance Coin addresses that hold anywhere from 100 to 1 million coins, they hold about 13.8% of the overall supply. And we did see a big uptick about 10 days ago, which is good to see. If we zoom out here a little further, we'll do the last 3 years again. It does look like overall, you know, even during this correction back in April of last year and in October, November, these whale addresses didn't really drop their Binance coin at all. And that's a good sign. They've stayed pretty high at about 13.8%, peaked, looks like right about here at 14.24%. They've come a long way since Binance Coin really started to get on the map back in 2018 and 2019. They were holding about 3 years ago, just 3.5%, and now they're up at 13.8%. So I'd call that a pretty good long-term sign for one of the largest assets in the world, market cap-wise. So long-term looking pretty good. Short-term, as we saw with the 30-day MVRV, not so good. Network realized profit loss, nothing too special happening there. Development activity, this is not a very active developed coin, if at all. Social dominance looks pretty neutral, nothing too special to say there. Weighted sentiment does look like it's seeing some positivity. Go to the past year, look at it week by week. There was definitely a clear local top here when people were getting very euphoric about Binance Coin. This was a sign of an upcoming top as well. And we've seen a surprising amount of positivity ever since mid-June, the last month or so. Not the greatest sign. We'd prefer to continue to see a lot of fear, but at least for now, people are staying mildly euphoric about Binance Coin. Ratio of profit to loss, this down to 1.0. Yeah, it looks like 1, 2, 3, 4, 6 straight days we've had more profit transactions than lost transactions. We'd prefer to see a few more lost transactions getting into the mix. Other than this day, this week, I should say, in July, things haven't been too crazy though with profit taking. We are seeing a bit of an abundance of profit taking happening right now. So mildly bearish here. Whale transaction count, nothing too special. And dormant coins, mean dollar invested age, not really any big downswing right now as far as the average age in which dollars have been sitting in dormant addresses. So yeah, I think Binance Coin looks a little semi-bearish as well. Many of them are after the week that many altcoins had, and you guys requested a few coins that are seeing major upticks over the past week. So take it with a grain of salt, but there might be some short-term corrections or at least flatness in order to cool down some of the excitement related to the altcoins. And then there could be a resumption, or it might be a bit of a downtick, as we talked about at the beginning of the call. You know, the recession fears are real, and we have to be wary of the fact that some of these real-life occurrences can have a major effect on Bitcoin and crypto's ability to get back to those all-time high levels, or at least, you know, 30K plus levels for Bitcoin. So with that, I think we can conclude here, guys. Thank you for all the participation and questions this week. It was awesome to see the turnout for this week in crypto. I thank you all for being able to join today, and I hope you all stay safe, and we will definitely have plenty more to talk about next week going into early August, seeing how all this recession talk has played out with the first week being reacted to. So for now, take care, be safe, and I'll talk to y'all soon.